Hello, my name is Deb Gerber. I'm a certified public accountant with the Small Business Development Center located on the Idaho State University College of Business campus. The SBDC offers free consulting services to businesses who are just starting out, need financing, help with developing a business plan, web and graphic design, and of course accounting and taxes, which is what I do. So today I wanted to talk to you about tax tips for your 2020 tax return. I'd like to talk to you today about tips for audit. Audit most commonly now in this day and age is by letter. We very rarely see a revenue agent or be called into an office for audit. The most common letter that you would receive from the IRS is a matching letter. That letter means that there has been a document filed on your behalf by your employer or an investment company or unemployment that you've forgotten about when you filed your income tax return. And the letter simply states that they found this document and this is how much you reported on your tax return. Is this correct? And if it is, please sign here, agree, and pay the tax that they've calculated on your behalf. If it's incorrect, then it is up to you to prove that the document is not correct. One of the things that you need to know is there is a 3-year statute on a filed return for returns that are most accurately reported. If it's a return that has significant income that's left off, the statute is 6 years. So the IRS has 3 years to notify you of an error that they see on your tax return. If you get a legitimate audit letter, that is one that invites you to call, make an appointment, and come into the office, or call and make an appointment, have a revenue agent come out and visit your place of business. At that time, they give you a list of things that they want to see. So for example, if they're auditing your contributions, they're going to want to see all of the receipts that you have. They must be written and totaled up to the amount that you deducted on the tax return. If you happen to find more receipts for contributions, then you also provide that and they will give you credit for those extra deductions. Another thing you need to know about audit is in preparation for an audit, I've already mentioned that the evidence should be written. There are various kinds of evidence. There's best evidence to the least accurate evidence. The best evidence is the written invoice or receipt. Most people think that a copy of their bank statement or their credit card statement is the best evidence, but it is not. It's the actual receipt that you got at the time of transaction. The next best evidence is the bank statement or the credit card statement, and the least best evidence is the testimony, the estimate. I think I had this much in contributions, so that's what I think I can prove, and that's what I'm going to put on my return. Another thing you need to know is the IRS will never call you. If they call you back, it's because you initiated the call to them and they couldn't answer the phone in a timely manner, and they ask you if you wanted a call back. They will always correspond with you in writing. They will correspond with you many times before they get really serious, in which time they will send you a certified letter stating that it is serious now, you do have to pay attention. If you got an audit letter and you had someone help you with the tax return, I would contact that preparer and have them go over the letter with you to see whether it is accurate or you need to provide written evidence to show that it is inaccurate. If at the end of an audit or a letter you decide that you agree or that they've assessed the tax, you have an opportunity to pay the tax and the penalties back and the interest back to the date the actual first return was due. You can pay it at that time using a credit card or a check, or you can do an installment agreement, which basically puts you on a payment plan with the Internal Revenue Service. If you disregard the collection notice from the Internal Revenue Service, they can levy your bank account and they can levy your house or any other sources of income that they have identified. If you receive a notice from the IRS, they give you 30 days to take action. Please don't disregard that 30-day notice. It works better if you respond to them in a timely manner, and it prevents all of these other letters that we talked about you might be receiving. So please contact your preparer and have them help you in a timely manner.